Latest updates on Shanghai's lockdown. Now they're going to ease the measures really. And on 1st of June, Shanghai will be reopening domestic flights. So I guess many in Shanghai are very fatigued by COVID-19 measures. And right now, the only city that is still left in a lot of lockdown is Beijing. Whether or not you agree on this strategy of lockdown is not the key point for today. The key part is China's reopening and its impact on oil prices. Let me firstly pull up something on the China Manufacturing Index. The red line is actually 50, which means anything below that is a contraction of manufacturing. You'll see that for the last few months, it's dropped significantly, correct? Since March of 2022, they've actually gone extreme measures again. This information is very important because it tells us one thing, is that China's manufacturing may have bottomed and moving forward, they will be consuming a lot more oil. In today's video, I'll be sharing with you two key parts. The first is short-term dynamics of China's manufacturing on oil prices and why it will likely push oil prices past $150 in my opinion. The second is long-term dynamics of oil, whereby many people are getting things wrong. So if you're keen to find out, continue watching on. Hi guys, welcome back. Now let's start things with understanding how much oil does China actually consume. If you look at this chart over here, China is the second biggest consumer of oil, only behind US. And as we know, US produces a lot of oil internally. They have shale fracking, but China, on the other hand, does not have a lot of natural oil, so they have to import oil, correct? And what we have discovered is this period of lockdown has seen China import a lot less oil. As of March, China has imported 13% less from Saudi Arabia and 14% less from Russia. And since we're on this topic of China and Russian oil, let me debunk the first misconception, which is China can just take all the excess oil from Russia, correct? And there'll be no undersupply of oil. But if you look at this map over here, you'll clearly understand. Russia transports it mainly from St. Petersburg. And as you can see in this map, you cannot really ship the thing from St. Petersburg all the way to Shanghai because you have to go around Africa and it's going to be very costly. That is why Russia mainly supplies its oil to the European bloc. And since we're on this topic of short-term supply of oil, let me debunk a second misconception also. If you read about news on oil, you realize that US has actually released a lot of emergency oil reserve, correct? In this article, in 1st of April 2022, 1 million barrels per day for the next 6 months. This will easily bring some supply all the way until October. But what do you realize? In 5th of May 2022, Biden administration has actually announced also a future plan to refill this emergency oil reserve. So what does this actually mean? US and I believe every single country actually has some emergency oil as a stockpile. They use this oil supply to regulate certain periods of imbalances. And this emergency oil supply can come in when there's an oil shock, like what we see in the war currently in Ukraine. However, this emergency supply is finite, which means it can only solve a short-term problem. It's not meant to be a permanent supply. And the worst part is after October, this emergency supply would no longer be effective. And they will have to refill this emergency supply, which means US will very likely become a net importer of oil at some point in time. This emergency stock is useless to long-term undersupply. Clear about it? And if you agree, help me smash the like button because it's taken our team hours to prepare this presentation for you. Stay tuned to the end because I have another bold prediction to make. And before we get there, let me explain the long-term dynamics of the oil supply and demand imbalances. In this chapter, let's talk about long-term dynamics. And Russia is actually the third biggest oil producer in the world. The first is US, but they mainly produce for internal consumption, which means Saudi Arabia is the only country that kind of exports more than Russia. So Russia's oil, if you understand the numbers, are very important to global supply. And think about this. What if Russian oil is off the markets for many years to come? You know, many have called a potential ceasefire settlement to be arranged very quickly, but we're now 2 months plus into the war already. And I've actually called before that this war is likely going to last very long. If you check the private members channel, you realize that I've mentioned something, that Mariupol's capture is the very least that Russia will stop at. They'll very likely next move to Odessa and they'll try to landlock Ukraine. But let's draw back the discussion to oil. And that is, as long as Putin is still in charge, in my opinion, it is very likely that Russian oil would be off the markets already. And there are many examples that are hinting towards that possibility. Let's look at the biggest importers of Russian oil. You realize that Netherlands and Germany sit atop that chart. And very recently, Germany has mentioned that they're building 2 LNG terminals to potentially import LNG from other countries so that they can dissociate away from Russian oil and Russian natural gas. That whole project is $2.5 billion, and it takes years to build a LNG terminal because handling LNG, if you're going to research into it, requires a lot of engineering processes. Netherlands will be participating in this new LNG terminal. And what does this tell you? It tells you that both of these countries are making big investments to fully wean off Russian oil and gas. They are thinking about a future where they are not consuming Russian oil anymore. And very likely, this is a permanent decision. Isn't green energy going to be replacing oil and gas? And wouldn't that drop the level of demand that we need in oil? To answer that quite simply, let's look at a tweet by Elon Musk. He has suggested for all countries to start increasing oil and gas output immediately, simply because green energy cannot fill the gap that Russia is providing for the world. In the last few years, the world has moved towards a mandate to develop green energies, but these are very long-term projects. And because of it, the investments into the oil and gas industry has been lacking for years. This is further echoed by Halliburton's CEO. The fundamental supply tightness existed before this geopolitical conflict, and that strengthens my confidence in the accelerating multi-year upcycle, and they believe that they will have very busy years ahead. Oil has indeed suffered from underinvestments. Even with this rapid rise in oil prices, it's right now only at the peak in 2014. In the last few years, oil was in many periods below $80, which cannot support deep water drilling. And since we are at this topic of the historical prices of oil, in 2008, you see that oil prices spiked massively because China was undergoing rapid urbanization. That was a demand shock and drove oil prices to $140. And if we see the entire run-up, it's about a year. However, oil prices crashed, correct? And that's related to global financial crisis. And when there's a deep economic recession, it's quite natural that manufacturing will actually shrink. And therefore, oil overshot in terms of its downturn, dropping all the way back down to $50. In my opinion, the true value of oil hovers between $100 to $120, which is why oil prices were in this range between 2011 all the way to 2014. Now, when in this range, you realize that a lot of potential supply can come into the market. There is shallow water drilling, there is deep water drilling. At that point of time, there were massive over-investments into the offshore oil and gas sector. You can hear stories of rig speculation, whereby people were flipping rigs to make profits. But if you compare it to now, you realize that people are worried to do long-term investments into oil and gas because for a few reasons. And I'll leave that for a future episode. So as always, if you are keen, smash or subscribe because I'll be covering that topic as to why many are afraid to recommend commodities. So in conclusion, I have this to share with you. First, oil prices are very likely going to touch $150. Second, Russian oil is very likely off the market permanently, which means oil prices could stay elevated not for 2022 only, but for the foreseeable years ahead. China's unexpected lockdown has suppressed oil prices, but that lockdown is reversing, and what I'm suggesting to you are bullish signals.